Hey guys, what's going on? What's happening? What's happening? Hey, I want to make this video on regards to the most traded pairs in Forex. I know a lot of you guys have been trained by me and others. You start going off in all kinds of directions, just grabbing anything and learning how to, you know, understand the movements of the market, price action, support and resistance, and blah blah blah, and all that kind of stuff. But there's actually pairs you're supposed to be trading to make your trading a lot easier. Um, and but the way I came into markets, it was one pair. One pair I traded, and that pair was EU. Why? Because EU was like the one that my mentor said go and learn everything about this one. Trade it up and down and sideways and everything you can, but never explain why. So I'm going to break it down to why. I'm going to break it down to why the U.S. dollar base pairs, being more specifically, should be traded more than any other pairs that you have. Reason being, and gold is in there too. Gold. So I'm not going to just talk about just USD pair, but gold's in there too. It's a relationship between gold and USD pairs. But the U.S. dollar pairs themselves, they actually make up the majority of the trading around the world every single day. But you see other pairs like pound yen and AJ and New Zealand CAD and all these other pairs, these minor pairs, and then there's like dollar Mexican exotic pairs and stuff that trade. But those guys are the ones that are not USD pairs. They're lightly, or should I say, thinly traded. They're thinly traded, and I'll explain to you why you may see certain things happen on the chart here in a minute. But I'm going to read a couple of articles here so that we can hone our point in, so you can see what you should be doing. You should be trading U.S. dollar pairs, one or two, okay, at a time. Or you can do three. It depends on your skill level. If you're good, you can trade as many as you possibly can, as your concentration level will allow you to do. Reason being, guys, is that the U.S. dollar pairs. Let me just get into it right here. The four most commonly traded Forex currency pairs in 2023. This was last year. I'm recording this February the 8th, 2024. And what I'm doing is I'm looking back last year. What happened last year? Because they can change, because it all depends on where does the flows go, the inflows go, the inflow. Where does the market flow? And it changes. It varies from pair to pair. Okay, so here's the deal. Forex markets reflect, and you can do a Google search too. I just did a what were the most traded Forex pairs in 2023. You can find this article as well. This is on hmarkets.com. Forex markets reflected much of the volatility that the global economy went through in 2023. Geopolitical conflicts, movements in the price of oil. Oil is another one that's good. Oil is a commodity, and it's actually a real commodity based on what? Supply and demand. Either you really have it or you don't really have it. About input and output. So that's a commodity. And if you learn how to do that, then you're good too. I'm trading oil, as a matter of fact, today. I did pretty well on this one, just catching the movement going up. So you should see, and the price of gas going up too. Let's see. And a short dollar rally towards the second half of the year have all had bearings on the ups and downs that the currency market saw last year. From a top level, this has meant that investors flock to gold. Okay, gold is number one. Why? It's an inverse relationship between dollar and gold. A safe haven asset in times of turbulence. A weaker dollar despite a short rally. So if the dollar's going down, gold's usually going up. Okay, and vice versa. I also admit that there's certain major currency pairs or major pairs conclude the year with decent gains. Here's look. They just look at the top four. It's gold, Euro USD, UJ, and Pound USD. Now this changes throughout the course, but it's always something related to USD. All of these have USD in it. Okay, not gold by itself, but gold against USD. Gold is often considered a safe haven asset, and investors tend to flock to it during times of economic uncertainty. The housing crash. Oh my God, 2008, everything crashed, gold went up. The war. Oh my God, we're about to get ready to go into some crazy time. Dollar crash, gold goes up. Okay. Subsequently, gold prices had a volatile year, fluctuating in response to changes in the global economy and monetary policies. Prices initially rose due to economic uncertainty and inflation fears. A huge inflation last year in 2023. However, as central banks around the world began increasing interest rates to combat inflation, gold prices fell. Why? It's because gold does not have a yield to it, okay, or higher interest rates. So that when that happens, people go to bonds. Because bonds are more attractive. So, guys, when I'm talking this language of yields and bonds, we're talking about investment banks. We're talking about hedge funds. We're talking about the ones who give billions of dollars, like BlackRock, for instance. They're $9 trillion, where they're diversified in all kinds of things. So they just look at the economic weather, and wherever it is, they put a little bit more assets, more of their assets in a certain commodity or certain asset or certain stock or certain place to make more money for their customers. Okay. Additionally, gold is also impacted by geopolitical events, changes in investment sentiment, like the wars going on. The increased tensions between major economic powers can lead to a flight to safety, causing gold prices to rise. And you see this all the time. So gold performed last year at an all-time high. Actually, it did. It hit very high numbers, 2,000 and something. I don't know. We'll look at it here in a minute. It lived up to its reputation as a safe haven. Now, this one here, I'm going to do a little bit more in depth. I'm going to look at the charts here for Euro USD. This one here, guys, is the most traded pair in the entire Forex world, Euro USD. The Euro USD currency pair had a mixed performance in 2023, reflecting the ups and downs of the European economic and political landscape. At the beginning of the year, the euro was bolstered by positive economic data coming out of the Eurozone. This coupled with U.S. dollar weakness due to its own economic and political challenges led to strengthening of the euro against the dollar. However, the year progressed, politicians' uncertainty in the Eurozone and strengthening dollar caused the euro to weaken, although it did manage to regain some of the dips of the 2023 year end. And then the next one is what? UJ. Again, these are different economies. Your Eurozone, the Japanese economy here, and then the next one is the British economy, the UK. Okay, so I'm gonna go through these here. You're gonna see what's going on with all of these. Okay, we just want to bring this just little articles to your attention. But the one I want to really talk about is the next one over here. This one is the most traded currency pairs in Forex. This is this year, 2024. So let's break into it. Being one of the world's most liquid markets, Forex involves various currency pairs. However, only a handful are in high demand and are mostly traded. This is around the world. More than 50% of traders in the Forex market somehow involve 50% of trades in the Forex market somehow involve the U.S. dollar. In fact, Euro USD is the most traded currency in the world. This takes up about 30% of the total multi-billion-dollar Forex turnover every day. Okay, and because it's trillions of dollars, I think it's $7 trillion a year that's traded. So euro and USD is 30% of that throughout the year. And it is not surprising that the economies of the U.S. and the European Union are the bloc. We are the strongest economies in the world. The Eurozone, the European Union, and the United States. Okay, the United States dollar is still the big boy on the block as of now, as I'm still recording this. So it just makes sense to be in this. Now I'm going to say this. The Euro USD, when you get into trades, guys, if you see that 30%, you have to be a government to manipulate the price of Euro USD. That's why if you look at Euro USD, we'll look at it in a minute, the chart doesn't have a whole bunch of spikes ups and spikes down. Maybe on news days, but if I'm talking about the daily, it's smooth. And when it goes, it's trading in trends. It stays in its trends for a long time. It doesn't range, doesn't do any ranging for a long period of time. Maybe on the daily, but not on the higher time frame for the weekly, the monthly, and the weeklies. We're going to see that in a minute. Okay. So traders prefer such currency pairs because their liquidity, okay, in and out. You listen to this. You can scalp this in its session. I'm going to show you this in a minute. On a 5-minute, 15-minute in the morning, okay, and be done for the day to get what you need out of the USD, the Euro USD pair. Okay, you want to trade these guys in their session, and to me, the session are in London or in the U.S. Mostly, the New York session. Mostly the New York session when the U.S. dollar, when the U.S. economy is open. That's the best time to trade. I'm going to show you here all this on the chart here in a minute using a method that I have that I'm going to share with you guys. And this way you'll see the most volatile times to trade each pair. Okay, so it's better than those with other pairs. Like I mentioned before, other pairs, like let's say pound Swiss, for instance. My God, man, that thing wicks so much, is up and down, up and down because it's thinly traded. The pound from the UK is good, but Swiss is a smaller economy. Okay, so there's fewer traders trading that, fewer investment banks, fewer investment houses, fewer hedge funds, the government's smaller that's invested into that pair. Okay, that pair and a lot of other pairs as well. That is why traders also use other currency pairs. Why? Because everyone would keep trading USD. Why? Only because there's no need to. If you trade Euro USD, to be really just if you just stay with. Look at what it's saying. There's really no need to diversify. Why? Because you could just trade this one pair and make all the money you need to make. But this is why traders use other currency pairs for diversification. Moreover, the trading volume correlates with the size of the economy in corresponding countries. So the British pound, the Japanese yen, the Swiss franc, the Australian dollar, and the Canadian dollar make up most of the actively traded currency pairs together with all of the US dollar and the euro. Those 1, 2, 3, 4, 5, 6 different pairs. Okay, those pairs make up mostly all of Forex. Okay, those pairs. So keep that in mind. Now let's look at the chart. The most traded currencies. Okay, look at euro. 28% of all of this is Euro USD. Then UJ. UJ is next. So it's euro, dollar, yen. Euro, dollar, yen. Then the GU. Okay, and then AUD USD. Okay, and then coming in after that, you see it broken down. It's in equal parts. Dollar Swiss and dollar CAD. Pick one. I like dollar CAD. That's why you guys have been trading with me. You will see my 11 volatile pairs, and you will see me include dollar CAD because dollar CAD has it's very good volume. And New Zealand USD is good too. You see over here it's 8.25%, 24%. It's very good. It's a solid because the New Zealand economy, which is right beside Australia, is very, very strong as well. It's a very healthy economy. Okay. And then after that, notice these are all USD pairs. Then you got EJ and GJ and Euro Pound. Notice how little they getting AJ and Euro Odd and so on and so forth. Okay. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 12 pairs. These 12 pairs is more than enough. But actuality, you can just trade US dollar pairs and get what you need out of the markets. Okay. What are the most actively traded currency pairs in Forex? The top 10, like I just showed you, pairs include major ones and several cross-currency pairs. I like EJ and G and then pound, mostly pound yen. So this is how you can mix it up, okay? Because we guys are all traders. Euro USD, GU, and AU, if you want to do it like that. Or EU is definite. You must trade EU. EU is your bread and butter. Mix it in with another one of these. You can do EU and UJ and then pick EJ. You can do Euro USD, pound, dollar, and GJ. 1, 2, 3, and focus on those 3 pairs. That's more than enough More than enough to keep you busy, more than enough to keep you profitable. I'm telling you, if you do this, you're not all over the place. And if you want to do gold, like I read a minute ago, you can mix in gold. That way you have 4 pairs, more than enough to keep you busy. That way you're not tripping. Let's see what's going on here. Hold on, guys. I'm in oil. And it just hit my trend line, my counter trend line. Okay. All right, let's keep moving. All right, so the most traded pairs, the major pairs is EU among the minors. This is a minor. The majors are the ones that I just showed you with the USD connected to it. Okay? These are the majors. Euro USD is next. You can pick this one. You can pick GJ, whatever one you want. The exotic is dollar, Hong Kong dollar. I don't trade it. I don't need to trade it. Me, my exotic pair is dollar Mexican. Me and someone else trades that one as well. We like the way it went. Dollar Mexican and dollar SEK. Okay, the Swiss krona. Okay, but you can do however you want. What I'm mostly focusing on is including Euro USD or the other USD pairs in your trading because they're high possibility of them not being manipulated. Okay. Okay, and this is a full list here. You see what's what. You see the other ones here, 30%. This is last year. It's 27.95 for Euro, 13.3% for UJ, and GU, and then AU, and then so on and so forth. And it goes on and breaks them all down after Euro odd, Euro Swiss, odd New Zealand, NJ, and this keeps you. Notice these pairs wick. These here, they got a lot of wicking going on. Euro New Zealand is good. Pound New Zealand is good as well. Notice it's down here. But look at the amount of governments and brokerage houses that actually trade them. Very small. These are called thinly traded pairs. Okay? So I like to stay up here at the top. This is why you see me focusing on certain pairs. Now, I can trade anything. I can trade any pair. It doesn't matter. Why? Because my top-down analysis is on point. You guys have witnessed it. You've seen it. It's all because I understand what's happening. Hold on, guys. Give me 1 second. Be right back. Okay. All right. I had to move my stop on U.S. oil. Okay. So, yes. So let's get into some charts. I'm going to look at the charts. I'm going to look at EU. Do it. I may not go through all of it. I just want to make this correlation so you guys can see how to actually do this. Okay. All right, give me 1 second. Do something on the charts. I use a tools, but different tools for myself. But we're going to look at the charts in a different kind of manner. Give me 1 second. Now, what I'm going to do, I'm going to keep my EMAs on here so that we can look at that. 1 month. I'm just going from the top to the bottom of my list over here. AU is first, and as we've seen, that AU was the fourth on the list here, AU. Okay, so it's okay. It's 6.3%. It's not a lot. It's not less. It's comfortable. It's a lot of money for billions of dollars is flowing through the Australian economy and matched up with the USD. Okay, so go to the monthly. Let's break it down. Make sure you this is where the technical parts. This is where your timing comes in. This is where you and yourself get together and you say, you know what, self? I got to get my TDA on point. I got to get on point so I can be, squared away and ready for these markets because I need to know what direction to be trading in. Okay? So here, I'm going to squeeze it up a little bit more. You clearly see that this market is in a downtrend since 2011. Okay? Down, up, making lower highs and lower lows. This is the last low here, last high. So price is in between here and here, but it's drifting down, up. And this monthly candle here is still down. We may be able to see this low here again in the next couple of months, 62.57. So I will be looking for sales on this one here. On the weekly, go to the weekly. Now in between this, look at what I just said. We like it was here, right? It went down and then for about a good 23. It's something to 23. Yeah, a few months it will pull back up and then it'll continue back down. So I'm looking for price to come back down to this area here over time, because the trend is down. The trend is down on this one. Now, I treat each of them separately according to what's happening in their economy. Okay? According to what's happening in all of these economies is how I look at each of them. Now, you can do the correlation of DXY, and when DXY is up, like I showed in the previous video, is going up, that these pairs, AU, EU, GU, and NU are going down, the opposite. That's correct in most of the time, but they're not on 100%. So you have to look at them according to what's going on in their economies. So here you see right here from December the 25th, here price drop, been dropping down for the past 6 weeks, 6 or 7 weeks. And you see that we're in a downtrend. Let's keep working your way down. Notice these zones. We're in between this zone to zone. Price hit this zone. Just tap, tap, tap. Notice how many times it's tested this area. Tap, 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 tap. And it's dropping. So therefore, it is in that zone there. Now go down to the daily. Now this is when you zoom in. I've already done video, guys, on the how to do the top-down analysis. I don't want to get 100% fully into it. Just want to show you what you could be doing. Okay? Now, this little zone here, okay, prices broke through here. We're now broke through, okay? We're below this zone here, and we're dangerously coming below here. The entry here, it was a couple of areas to enter this for the sell. This was the zone right here, and you could have entered it on that break there. If you're paying attention to it, look at this here, ranging from this low. See this candle here? On this big candle, you sell, you enter, add to your position up here. This is after it's dropped. Okay. Now we're below here. We're below this support area. Okay. And look at it now. Right here, if price breaks again below here, you look to sell below this. Okay. Well, I don't know what it's going to do right now, because according to what I see, this candle is dangerously low. So it may push down and break down, and if it does, it's going to most likely continue down, like I said, into this area here. Okay, the trend is down, long-term trend. Listen to me. Listen to what I'm about to say to you. The monthly and the weekly are king in controlling price. The monthly and the weekly is king in controlling price. The daily is just a reflection of what's happening up there. Okay, your execution chart here is on the daily. On the 4 hour, and you look on the 4 hour, and you see a little closer what's happening. Now I have a pattern formation here. It's a reversal chart pattern that I have. It's called a 1, 2, 3 reversal, and it's still in play right now. This is the low. That's the high. Right here, as long as the price don't come out of this, we're good. Okay, so what I want to do is I'm watching for price to either go up. If it pushes up, then I know it wants to do this. If it breaks below this, then I know it's gonna go down. So right now, it's nothing to do. But how do you win with this? Like every day, B? How do I win with this? How would I come and master something like this? Like, I guess I want to scout. Let me show you something. Give me 1 second. Okay, so say if you're day trading. A lot of us are day trade. We can know how to day trade, but I like to keep the strategy separate. When you get good at trading, guys, you can scalp, you can day trade, and you can swing trade. Two different kinds of swing trade. Short-term swing trade, where you may hold for a couple of days to a couple of weeks. Long-term swing trade, where you're holding for months. Okay, so make sure you understand the difference between that particular account that you're doing that with is for that particular purpose. Make sure you understand that. Then there's a day trade where you want to just trade for that day. And you want to get in at the low and a high. Okay. And then there's scalping when you want to be in for a few minutes. It hits certain areas, and you might want to do a 1 to 3 or 1 to 4. You can do that too as well. So here's what you do. Go down to the 1 hour. I'm going to give you the sauce. We get ready to sauce it up. Okay, let's say this is AU. Okay. I don't have the period separators on this one, but I have it on another one. I'll show you here in a minute. But let's say that, let's see, where are we at? Look at the bottom. The day's date started right here. Right here was today. Right here. Got 24 of these candles. And you've seen that this was going down. Look at my EMA cross. Look at the lower lows. Okay, and you want to enter this. You enter that right here and you just drop. Let it drop. Let it drop. Let it drop. Now, how do you get a sniper entry? Let me show you something here. Use the 1 hour as, and this is for AU, EU, G, any of them. But remember, I showed you EU. EU is the most active. EU is the most active. I'm going to show you when to trade that one here in a minute after I get through that. I'm not going to go through each pair. I'm just going to show you maybe 1 or 2 live results of what I'm doing here in NU and show you EU. Now this right here, this is called, let me choose this up right here. I don't want to make the chart too confusing. I want to keep it clean. Okay, this thick yellow line here, this has the period separated. This is today. This is yesterday. Well, it was the 7th yesterday. And that here is today, the 8th. It's reading in my time, the UTC -6 for Chicago. So up here was when it started, right? This black area here, I'm going to squeeze it up. This is Asian. This is the Asian session for AU. AU moves in the Asian session pretty good. So you can actually trade this pair. But it's slow. It's very slow. It's very slow. Okay? You've seen this setup. 1, 2, 3. You see the cross right here. Look at the MACD going down. Now this is the juice. Okay? You have to be paying attention. You have to dedicate your time to it. And you see that this here, right here, it started to drop when? This line right here, for me, is when London opens. This little yellow space right here is London. Okay? Now, and it fell a lot. As a matter of fact, this was the drop for the day. Okay? The London session. Okay? And it just drop. Okay? I just got it on London. Give me 1 second. Now, this is called the kill zone, guys. I just cut the New York session on. Most of the drop happened for this one during the London session for this particular pair. This was for yesterday. Okay, and it bottomed out. This thick line right here, I cut on New York. Okay, you don't have to keep this on. You can take it off. You only want to see like when you're timing. What time is the best, most volatile time? Okay. So today, this pair was definitely down. This is a 15-minute. You can trade 15-minute. You can trade 5-minute. I like the 15-minute, because it's less noise. I'm still following the 1 hour like I just showed. The 1 hour right here. See? Down. For the day. From here to here. Okay, so I know that the trend down. Why? It's making lower highs and lower lows. So therefore, and not just that, and previously it's making lower lows and lower highs. Now I'm going to get into some, not on this video, on imbalances and breaker structure and change of character and fair value gaps and all that kind of stuff. But it's here. It's right here in your face. You just have to be able to see it. It's actually the same thing I've been sharing and teaching with you guys. You just have to hone in on it. Okay? Now, this yellow shaded area and this gray area here, this area here, when it passes this is New York. Look what happened. It just died off. It dried up. Okay? But right here, too, is making a bottom. All right? So the most volatile times, mostly, if you look at this, just squeeze the chart up and see when does this move the most. London. A little in London. Okay? London and U.S. Okay? This one actually moved in Asian. It was some news. Okay? And if you look at it, now this is me just gathering my intel. This bad boy trades all the time. So it doesn't matter. So now what you need to do is you need to pick a time. The best time is in New York when it's really active. Okay? When it's really active. Give me 1 second. Now this is New York session. I just got New York. I'm going to go down to the 5-minute. This is how you find your setups for the day, bro. Look at this. This is crazy. I'm just going to go over here for today. And I'm just going to look at New York. Is there any trades here? New York was here. It was already dropping. How could I have gotten into this? Like I showed you before, from here to here, it was an entry here, right here, or below here, right across from me. See this across? Let's say New York open. This is for me, it's 7 a.m. And I come in, I want to get in. I'm selling. Look at the EMAs right here. Boom, 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 boom. How many pips is this? From here down. Whoops, I went the other way. It's a 5-minute chart, so it's like 10, 11 pips. Now, 10, 11 pips is a lot when you have, let's say, for instance, whoops, let's do it this way. For instance, you get in right here, and your stop is like above here, and you're going right here, down to this low. Still a 1 to 8, almost a 1 to 2. Bro, that's a lot of money, depending on how many lots you put on. That is a lot of money, depending on how many lots that you put on. Okay, you can make a nice bag right there. Okay, now this is for AU, but let's go to EU and let's do the exact same thing, and then we'll take a look at the pair that I'm in now. EU. Remember, EU is the big dog. Now y'all know why this. Now I'm going to show you guys something here. I'm going to go to the top-down analysis. Go to the monthly. Make sure you mark your charts up. I got all my work is done. I don't have to keep fidgeting around trying to look for this. It's already there. All I have to do is just come to the chart. Okay. All right. So as you see, just like with AU, the trend is down. Been down since the housing crash, 2008. Lower lows, lower highs. Lower lows, lower highs. It ranged right here. And 15 just ranged. Wow, to 17 for about 2 years. It ranged across. I remember this. And it just was ranging. And it popped up. See, if you see what it's trying to do or where it's going to go, you know. Down, up, look. It actually was, I think it broke this trend line. I had it from here to here to here. And it broke it. Let me do something. Give me 1 second. Yeah. It broke the trend line over here, okay, and it popped up, okay, and then it came back down. So now the trend line is the current one that I have is right there, okay. So as we see, currently it's down and then up and then down. Now I'm going to zoom in a little bit so you can see what I have here. I have this high and this low, and price just came and hit this this golden zone here between the 61.8 and the 50, and it's now below. So it looks like it's heading down as well. Heading down from where? Remember, price goes from zone to zone. Okay? Down. Down. Okay? Down. Go down to the weekly and let's come in closer. Down, when I'm saying down, down what? Down is the overall trend. Overall trend. And let's look at the near-term trend. See, this has been going down since December 25th. Christmas. Nice Christmas present. Okay? Down. Okay? It's rejecting this little area right here. This little area of, this previous area of support all the way across. Do you see where my mouse is? My line is. Okay? It's bounced off and it's trying to push up. Okay? Now, the immediate trend is down. But the nearer term trend is up. The overall trend from the monthly is down. Remember, overall trend down. The near term trend is up. And the immediate trend this past couple of months is down. Let's go to the daily. Keep this in mind. Follow the flow. Follow the flow. You know where to go. Follow the flow. You get the dough. Let's say that. Follow the flow. We're going to get that money. So look. This is what I drew on here. Head and shoulders. Okay. This was the neckline right here. Boom. Look at price. Price broke down. This trend line here. Bam. Price broke it. Broke through. And it came back up. This price where it currently is not all the way below it. So if it breaks down, then we'll have it down. Now look at my EMAs. It broke over here on January the 15th. And you can be down and it's sold. This is for a swing. Right here, right there, 206 pips. You see, following the flow. Now, what I want to bring you here for is look at the candles. There's no whole bunch of wild. You see them here. This is news. This is Friday, NFP. You'll see a few of these, but most of these are nice, good, steady movement. It takes a lot, and notice when I showed you all of it, it trends nicely. Nice trends. It trends nicely. So you can always have a nice, smooth direction on where to go and what to do. Okay? Let's go down to the 4 hour. We've seen the 4 hour already on AU. So this is pretty much doing the same thing. Let me pull this up. And let's bring it near term. Let's go to the top. Boom, 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 all the way down. This is the inner trend line. Okay, from here to here. Not there because it's going to go through. Let's go to the current one when you're coming to the charts. When you are coming to your charts, bro, you got to see what's going on. So look, boom, look at this. Now this is your execution chart. Now that right shoulder that I showed you on the other time frame right here was from here, where? Right there. Right below this 200. This was your entry and it went sideways and it drifted. Okay? Started drifting and dropping. So you say you enter here all the way down. Like 205 pips, same thing I showed you. So you got to come in closer so you can see what's happening. Now, what are we doing now? What are we doing now? It's still down. I don't see anything strong. I need to see price do a new what? Break of structure. Whoa, hold on, guys. Bitcoin and what's the name that's going berserk? I'll show y'all here in a minute. Give me a second. And we'll take a look at this because this is the next thing I'm trying to bring you to. But anyway, what that's doing, what it's doing, we'll be looking at this. I need to see breaker structure means I need to see price. Like we made lower lows and lower highs. Notice this didn't go higher than that. That didn't go higher than that. This here, the last low, price is between here and here. I need to see price go above actually this key level resistance area up, not here, but I'm gonna put it right here before I get interested in a buy on this. I see it trying to come up, but I don't see anything changing. This is on the 4 hour. This is the lowest time frame I'm going to go to do my analysis and for my execution. Why? Because this is like the weakest confirmation time frame, but with this is my my entry time frame. It's the time frame I'm entering on. Okay. All right. So we look at this down, up. Okay. That's that. Now go down to the 1 hour. I'm going to go to the 1 hour. I'm going to show you guys something here. On the scalping, you want to come tomorrow, and you want to do some scalping in the morning. Follow this bad boy to the T. Here we are, right here. This is the 1 hour. This is for today. In the 8th, yeah, right here. Okay. I'm gonna go over to the chart that I was on. We're gonna change it to EU. Okay, let's go to the 15. I'm gonna do the 15 because the 15 is smoother, guys. So to me, the 15 is just much smoother. Here we go. The dashed lines is the period separator. Okay, this is for the 7th. This is for the 8th. Again, it moves good all the time, so it doesn't really matter. This doesn't have one of those times where it's sleepy. This is EU. It trades all the time at every session. Okay. You just need to find out what is it doing when you come to the computer. So you come in the morning. Okay, let's say we came here this morning. We weren't open for London. We were sleepy. I'm sleepy. Came in. We seen the price had bottomed out. Okay. Kind of get into it a little bit. 1, 2, 3 bit green candles. I'm gonna do something here. Just a little bit. 1, 2, 3 green candles. There's an open space between here and here. Let me just draw the line so you can see it. Okay. And here. Okay. the zone would have been right here. From this candle here. Okay, what you wanted to do is you wanted to see price come back actually down here for a good entry back down here. Okay, if not, that's okay. Why? Because when we trade, we know we have what we have on our charts. We have our handy dandy MACD, and we have our EMA cross to tell us, plus the TDA 1, 2, 3. I missed it. Okay, bam. I'm getting in right here. And then now you should be long this EU. You should be long this if you caught it from right here. Okay. Now, this is for a day trade setup. Now let's go down to the 15 and let's look at the same exact area, the same scenario, and let's see what we can see. It looks like it is sleepy right now. The market is sleepy. She's sleepy. Okay. 1, 2, 3. Okay. Did we have anything fill in? 1, 2, 3. It didn't come back. Again, it didn't fill in this space right here. See this space? It didn't fill it in. Again, I have a zone here. The price never came back, but it's okay. Why? Because it changed right here. Okay? It changed right here. MACD changed above here. Bam. How many pips was this? $25 pips, which is great. You can get 25 pips in one day. Imagine getting 25 pips. Okay, you doing your due. You're knocking it out. Let's say you have multiple accounts and you have your account connected to whatever, 5 accounts, 10 accounts, 15 accounts, whatever it is, then that's 250 pips. If you got 10, you got 20, whatever. It's 500 pips. Okay, so you do it that way. Your reward. Let's say you entered here, right above here, and your stop was. You don't want to go have it too. If you're going on a 5-minute, you want your stop all over the place, right? Put it back down a little bit and go for at least a 1, 2, 3. I would have shot for this zone back up here, this zone here, because price does what? It goes from zone to zone. This was a 1 to 2.86. Okay, if you can get it, you can get it. You just got to be patient. And if you feel like, okay, I'm tired, I don't want to wait anymore, move your stop up and let the market get you out. You can do it that way. Move the stop up and let the market get you out. Okay? All right, guys, that's going to be it for the view. Let me see something here. Let me pull over. I am in 2 trades here right now. Actually, 3. Let's see if I can get this bad boy in here. It is the New Zealand USD. Let me open up. I'm in Bitcoin and I'm in New Zealand USD. We can look at both of them separate. I want to fit it in. All right, so here's the deal. This is my USD pair that I had going. Okay, no studies, no nothing, just a regular chart. Okay, looking at what we just saw, what we already saw. Let me do something. Get this off of here. Give me 1 second, guys. Give me 1 second. Okay. All right. Back. All right. So, same thing, same TDA as you would do on your trading view. I like to do TDA here now, guys. For some reason, this is just so much smoother and sweeter. Trading view, you can see a lot of history. I don't need a whole lot here. Yeah, you can still see it. I don't need like anything back this way. I just need to see what's going on from here. So the same exact thing. Just do your TDA. Mark up your chart here. 2 points to make up your line. All right. Higher lows and higher highs. Okay. Market has been a little rangy here, but it's okay. Right through here, but you see what? That the market is still going down, still down. So the market is, for me, has been up, down, and I'm trying to get this push back up. Okay. Go to the weekly where we can see things a lot closer. And I'm in this cycle here to here. Now I'm going back up. Why? Because my trend is up, so I want to be looking for. Now on the weekly, it doesn't matter if you're swing trading. Trade this bad boy up and get these pips. Trade it down, get these pips. Why am I saying this? From here to here, man, that took 18 weeks. From here to here, man, that took 6 weeks, and so on and so forth. When you see the tool here, if you're my student, you know to take the trade and don't be afraid. Now we're going back up. Okay. Now on the daily, let's go to the daily. You see, this is a move back up to where? Do your fibs. I'm just doing a little regular TDA from here to here. I'm expecting price to come back up to at least up to this area here, where this area of resistance is. Insert your little shape for what? To represent where prior resistance, prior support was. Back up here. Say, I like to tell you, get in my box. Come up here. There you go, right there. So price should come back up through here. All right, we don't want to confuse it, so I'm going to remove the. We'll only make the fib tool visible only on the daily. Okay? This is how I keep things separate. I like to keep things simple. All right. Okay. So on the 4 hour, I start doing my analysis. Let's see. 1 wave, 2 wave, 3 wave, 4 wave, wave 5. I'm expecting this actually to go back up here, not to the line, but to this area here. This in the middle of this zone here. Okay. Okay. All right. So let's open it up. Now we see 1 wave, 2 wave, 3 wave, 4. It's right now trying to pass this. It may do a correction down soon. We will see. I'm in profit. I'm not going to throw it away. So what I've done is I got in up here on a higher time frame on the daily. Up here when it was going up, got wicked in. It's okay because I want it to, and I try to average it. And I said, look, I'm going to wait for it to finish coming back. Okay, back from where? Let me remove this. Let me just be, well, no, let's not remove it. Let's do this. Let's go down. Let's flip her up. Go from here. Here. Look what price did. Came right down to the 61.8 to 50% area. I said, okay, well, this is what I want to see. This is where I want it to be. Let me strike. So I watched for it to come up. Went down to the 4 hour. Right here. Go down to the 1 hour. What did I see on the 1 hour? If you, my student, you know what this is. This is a what? A 1, a 2, a 3. So I entered here and let price do what it's going to do. Let me pull this up a little bit. Never know when it's going to, even though I think it's going to push up, I still like to lock in profit. Okay? All right. So scalping, and I'm on the for real. When you come in the morning, what are you trying to do, bro? What you looking at? Bam! Look at this. We got our tools here. We got our divergence tool. This was yesterday evening. Actually in the New York session, and you're seeing this as an opportunity for you to buy again. Actually, right up above here. Get that 11 pips. Poof. That's if you want to do it. Give you another opportunity. Boom. And this is where you are now at 31 pips. So you can do this over and over and over and over and over again. Here is the sell yesterday. Down, up, down. Okay? Now, before I go back over, let me look at Bitcoin. Let me put this back where we're, because my view is longer term. Because I can see what this is trying to do. Let's look at Bitcoin real quick. This is a little off topic, but it's the same thing. Bro, I got in way down here. Now, what I don't like, I'm about to start griping, is these Dabgun. This is the FTMO, guys. Man, the fee, I'm almost at $200 in swap fees. It's like they don't want you to win. So you can do this, guys, on your cash account too. LQDFX, check them out. You need the link, hit me up. I'll get you the link to get you an account. No swap fees, no commissions, okay? At least for the first week. They will take care of you. I promise you, because I don't have any swap fees on that. Okay, so you see here, this whole area here was ranging. It looked nasty. I've been here for like 2 weeks, just ranging around, wandering around. Right here, here it is. Wandering around. I was just in here saying, okay, I'm going to buy it. Why? Because here's my thinking. The ETF just came out. It's a little off topic, but still. ETF just came out. We're going to be actually going higher for the rest of the year. So might as well just get in and hold it. And if you haven't bought Bitcoin, you need to get you some Bitcoin off of Coinbase or wherever you get your Bitcoin. Put it in cold storage, do whatever you got, and just sit on it. Because we are not going to be seeing these low damn prices anymore. I promise you this. It may pull back and do whatever, but man, once this gets going past the weekly here, this, what is this, 60,000, 69,000? Bro, we're not going to see this again. Okay, now, there is going to be some pullbacks. I would say probably back down to about 34 or so, but you're not going to be seeing this again. You're going to see $15,000 Bitcoin. That's not going to happen. Then it's going to take off. Okay, it may just keep going. We do not know. But the point that I'm trying to make to you is, this is how you do your TDA. Range, sit on it, be patient, wait for the breakout, boom, 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 boom. I have an area where I'm going to be taking profits here. It's reaching here. I'm not touching it until my stop loss is set. It was the 1700 on this one already. Okay. All right. One more, guys. On the on TradingView. Let's look at it real quick. Get back to this, and that is NU, and that's going to be it. I want us to win. I want everybody to win, because if you understand where to focus your energy, then you can win. All you have to do is just focus. When you come to your charts or you sit down on at your computer, you know what you're doing when you come. You say, okay, all right, I'm going to go do EU or NU or AU or GU. The ones that I showed you on that list, I like EU. EU is a definite. EU. Now, like I said, you could trade it longer term, monthly. You can't hold these for months, because I don't know, there's no broker that, when I say months, you can for months, but you can't hold these for years. Your fees will be racked up. It doesn't make sense. So I say get in and get out reasonably in a couple of weeks, couple of days or a couple of weeks, when you can make your money. Now, this is the same as the other ones I just did, but you see this one here is trying to like come up. Okay, the real breaker structure on this one here is you go down to the weekly and you'll see it above here, above this area right here. Right here. I'm going to make this little minor. This is a minor zone. Sorry about that, guys. This is a minor zone. This is where I want price to come back up to. Okay? I want this shown only on the weekly and below. Okay, so that's where this is trying to push it. Look, it came back down. Look at our price. Hit here, bounce here, bit here. Came back, reject, boom, reject. Bam, broke through, bam, bounced off, and now we're back. So this is a key level area here. So we're seeing the price. What we're seeing here is price going back up. I have it down on the lower time frame. Just keep doing your TDA. The more you do this, the easier it becomes, because you're doing it. And don't be playing around with this like 30 minutes a day. Really do this for real. I mean, really, really do this, guys, because this is prop. This is money. You can see the money. You can see it. But if you're not going to master it, you're not going to get serious with it, then hey, just leave it alone. Don't play with this. Be an investor. Okay? But look, lower lows, lower highs. Boom, we see price right here. I'm going to go ahead and put my trend line from here. Well, let me do something here. Yeah, this is going to be a daily inner trend line from here to here. There. I want to see. Yep, it's broke. It's been broken. This one here. These wicks didn't come out. This one is. Okay. All right. So, and it's ranging too. That's wanted to see. All right, so I see that this has done what it needs to do. I see that it's trying to come up 4 hour. What am I looking for here? I'm looking for price to move up. My deal here is broken. My MACD has told me that the momentum has changed right up here. Okay, so we just went above that. It's having a struggle to get through here. I drew this before right here. If it breaks this, then it'll continue on mostly up to this area of resistance. Okay, on the 1 hour, I got in on the 1 hour. As you can see on the 1 hour, where is that? Right here. This break, this cross right here, okay? Cross here or here, and then let the price just take, like I just showed you, just let it take you in. Now, the flow is up. Wave 1, wave 2, wave 3, wave 4, wave 5, okay? Wave 1, wave 2, 3, yeah, let's say 4, fourth point. Make it up there, okay? Like that. 1, 2, 3, 4, 5. That's how I'm seeing this. Drop down to the other chart. And let's find in you. All of them can be done. Pick your pair and do your pair. Do your pair, do your pair. Look at this. They all did the exact same thing. Okay? They all did the exact same thing. Look at this. This is the 200 SMA. Price broke out of this 200 SMA. This dashed yellow line is the 20. I have a strategy I'm using for the 20 and the 200. When price met, because price is doing one of two things. It's either going sideways or close and near each other, or it's either far away or moves away from each other. In this instance, this is one of the rare times where the 200 SMA and the 21, I'm giving it to you, it's meeting, and when it meets and it breaks out, pow, an explosion to the upside. Goes the same exact way going down. When they meet, down, up, big fat candle, elephant candle, boom, a retest. It was a retest and then just fell off. Okay, guys. So I'm not gonna make the video too long. It's about an hour almost. I just wanted to bring this to your attention that you can trade the Euro USD pairs easier with less trouble, with less resistance, and there's more volume going through there. Trade those pairs during the New York session. Whatever session you're in, if you're in overseas, you see that you can trade it during London. If an Asian, like this pair in AU, they're open, they're moving, so they're good pairs to trade. Okay. UJ trades good in US session and Asian sometimes, but it still moves as well too. Okay, so pick one or two. Like I showed you, if you want to trade a minor pair like EJ and GJ, you can. I like GJ. GJ moves good too. Why? You got those two strong economies. Okay. All right, guys, that's going to be it. I hope this was informative. I hope that this helps you in your future lineup of what you're going to do. How are you going to attack these markets? Get this money. It's all here sitting at you. I know some of the stuff here may be a little confusing. Do what's clear to you. Okay, I showed you my chart with nothing on it. The MT4, I showed you this chart. And those of you who have the other tool from Vinny, you get that on there and it helps you with your timing as well too. All right, guys, take care. Peace.